this is what we love about the 2 Properties to Financial Freedom strategy is it's achievable, it's realistic, and it gives you choices way sooner.
I don't know what it feels like yet because I'm not there, but I'm trying to slowly work towards it because I've realized it's not a sprint. And when you start to enjoy the journey and the person that you are along the way, and you get to do meaningful stuff along the way and realize that, you know, the dollar in the bank isn't really going to change your mindset because you'll be the same person there. But like theoretically, you know, I'm assuming when I get there, it'll be nice.
All right, welcome back. Thanks so much for clicking on the episode, guys. It's going to be a good one today.
Super excited. Like, if I had have heard about the ideas we're going to talk about today 10 years ago, I don't know if I'd be working right now.
Seriously, I'm so grateful and happy about starting my investment journey, understanding these fundamentals and understanding different ideas and strategies that we're going to be talking about because, you know, I've just gone straight to the jugular and just focused on such amazing properties from the very beginning, and it's really helped me avoid mistakes and pivot strategies because, you know, over time things change and your circumstances change and your priorities shift. But, you know, something so simple like this strategy that we're about to talk about just gives you so much confidence in your journey and where you're going to be in the future.
You know, so what happened is I started investing like so many people do without any sort of plan, without any strategy, with no mentor and no one to really talk to. I'd just been listening to heaps of stuff like this and reading books and trying to put the pieces together. And so what I ended up with like 7 years down the line was a whole bunch of weird properties that kind of made sense, but kind of didn't as well. And I was in a position where I was starting to, like, I'd had my second kid, just about to have a third, and I was like, my priorities had completely shifted from just wanting to work my ass off in my 20s and 30s to, oh my God, I've got these little people at home that want me to be there, that I want to be there for, and I want choices in less time than 20, 30 years in the future when I finally get to pay off all of this debt that I was holding on to at the time.
It's not uncommon as well. Like, most investors just go out there and start buying properties. You know, it doesn't come from a base of a very strategic, thoughtful plan that you know exactly what you need to do and exactly when you need to do it in order to achieve a specific number in terms of a passive income in the future. Like, it is super normal to do exactly what you've done because people don't always have that foresight or the ability to, you know, listen to these things. And nowadays it's so great with all the podcasts and books and blogs and things like that out there because you can take all of these different pieces and ideas from different people and then figure out what's going to make the most sense with you and what really value aligns with yourself. But, you know, it is important to recognize that it's just not common for people to focus on a strategy like this.
Without a doubt. Like, you know, it's, in fact, 90% of the people that I speak to, even the ones that have been listening to us for a long time, have just struggled with that idea of, this is exactly what I'm going to do. This is exactly where I want to be by when, and this is my next action step to take. And so, you know, it originally started as this idea called 4 Properties to Financial Freedom because I had this goal in my mind of, if I could own 4 properties outright in about 20 years time, it would give me somewhere around about 200 grand a year of passive income. But since then I've realized like 200 grand is a lot of money. I don't necessarily need anywhere near that, especially once you own your own home outright and your kids aren't young anymore. And so we reduced it back to this idea of 2 houses or 2 properties to financial freedom. Now, I went through a crazy period where I literally decided to sell 7 of my properties over a period of 5 or 6 years and went all the way back from having bought 9 properties to 2 and then rebuilt my portfolio based on what I wanted, which was good quality assets in good locations with potential for capital growth that produce incredibly good quality cash flow that I could add some value to either at the time of buying or down the line in the future. And so I've cleared the decks, which, you know, was extreme, I know, and is going to affect my long-term wealth position because I don't own anywhere near as much property anymore. But it's enabled me to create choices sooner start to produce a little bit of surplus income to take the pressure off my job and my business, and also made me sleep a lot differently at night because I'm absolutely heading in the direction. So I know there's some people out there that are like coming from my place that's like, shit, I've got all these properties and I'm trying to figure out how they make sense for me. And, you've got to go talk to your accountant or financial advisor about that. We can't talk to that. Or there's people listening to this that are just getting started, and holy shit, I wish I was you, because this is so exciting in the sense that you can literally design the portfolio that's going to get you to where you want to be. And instead of it taking 50 years, it might take you 20, 30, or even in some cases 15.
Hell yeah. The idea that we're talking about here is essentially what we call the 2 properties to financial freedom strategy. It's super simple. It's so achievable for anybody out there realistically. And we just love the returns. Now you can go out there and you could be a one property to financial freedom person, or a 3 properties to financial freedom, or 10. It's completely up to you. But today we're going to talk about the 2 properties to financial freedom, because this really enables the average Australian to actually achieve financial freedom.
For sure. And it's a simple idea. Basically, you go out and buy a high quality home in a good quality area with a nice big backyard, and you build a granny flat. Now, what we will say is you definitely want to be talking to a builder, a town planner, a building certifier, and the local council, just to make sure you can do it in that space. And then effectively what you've got is a house that you can rent out, and a granny flat or a secondary dwelling or auxiliary unit or an ancillary unit or whatever that tiny home, whatever you want to call it, out the back renting as well. And that creates 2 incomes from the one property, and then long term when you own it outright can hopefully produce that passive income for life for you.
Yeah, so what generally happens here is over time you're going to pay off the debt on the property, and there's so many different ways that we can go about doing that. But we're going to get into that during today's podcast.
Yeah, without a doubt.
Okay, sick. Which we will once we go through the phases. But over time, the idea is to own these 2 houses and 2 granny flats completely outright, and see an increase in your rental return over the period that it takes you to pay off that property. And then essentially you live off the passive income for life.
This concept is so simple that most people look for something harder to do.
We were watching something the other day, and I mentioned it to Ben. It was a Gary Vee thing, and it was all about simplicity, and we, for some reason, overcomplicate things all the bloody time, and I find myself doing it all the time. But sometimes things are as simple as they seem, and this really is, guys. So let's break it down into the 3 phases that it takes to actually execute this.
So the very first phase is called the accumulation, and this is super simple. It's when you buy the properties. So that's the phase when you save your ass off, like Simon and I both have, or you potentially have some good equity in your own home, and you take those savings or that equity to a mortgage broker or a bank, you borrow some money, and then you go out there and you buy the 1 house and build the 1 granny flat, or the 3 houses and build the 3 granny flats. And that first phase is all about getting yourself set up with the properties and the passive long-term income that's going to set you up for life. And so again, most people stuff up the accumulation phase because they take too long to achieve it.
Yeah.
Now, again, we're not advisors, and we're not saying to rush out there and buy 1 or 2 or 3 houses at any point in the short term. But, what I find most families do is they buy 1 home, they wait 5 or 10 years, and then maybe they do a second one, and then they wait another 5 or 10 years, and then they do a third one. Now, the difference with me and Simon with our accumulation is we did it over a relatively short period of time, while the assets were cheap and while the builders were still cheap, to set ourselves up with the portfolio that will one day make us free.
And the sooner that you can finish the accumulation phase, the sooner that you can move into the second phase that we'll talk about. And, there's so many different things that are important to talk about there. Buying properties at lower prices means that it's less debt that you've got to pay off.
Yeah.
Buying properties at lower prices means that you're probably going to get a stronger rental yield as well. So the cash flow is going to be better, which is going to once again help you pay off the debt much faster. So yeah, as Ben said, we're not telling you to rush out there and go do this in 6 months or 1 year or 2 years even. Figure out how long it's going to take you to do this. But what's important is to remember the long-term vision and stay motivated and focused to executing the accumulation phase, because it all becomes worth it the sooner that you can do it.
You know, the beautiful thing about Australian banks and the financial system at the moment is it's so hard to get money, and they are so bloody conservative. So
Man, I'm going through it right now trying to refinance, and it's just, man, they want everything. They want to know what I've eaten for breakfast.
without a doubt, like they asked for some blood from my first one. It was like, these guys are brutal at the moment, which I love because it forces everyone to slow down. Now, you know, theoretically, after the banking commission, if someone's going to be able to access finance, generally they are worthy of that finance. Now, some people are still going to stuff it up down the line and not pay their loans back, but it's so conservative right now that if you're able to grab it, there's a strong likelihood that the banks see you as a lower risk with an ability to pay. Otherwise, they just flat out say no. Like, I just got no's for years and years and years. And now finally, after saving some more money and paying off some more debt, I've been able to borrow again, which feels good.
Hell yeah. So the idea with the two properties to financial freedom, what we're doing in Brisbane right now for ourselves is essentially one house and one granny flat in 15 years from today should replace around $50,000 worth of income.
Now, the way that we're getting to that number is if we buy a home that rents for, let's call it $450 a week today, and then we add a granny flat that rents for another $300, we're effectively getting $750 a week in rent from that one house and one granny flat. Now, where Simon got to $1,000 a week of gross income is if that $750 a week increases by 2.5% per year for 15 years, you're going to get a roundabouts or a bit over $1,000 a week times 50 weeks a year is 50K. Now, we're not economists, we're not planners, we can't work out, you know, all of the numbers in terms of the holding costs, the taxes and the inflation, but it's just an easy round number to work off. So for me, back in the day when I want 200 grand a year of passive income, I simply reversed it the way that Simon has and went, I need 4 houses and 4 granny flats owned outright if I want to get to that point. Now, I can't control the market, but historically looking back, rents in Australia have increased at a faster rate than inflation, which makes me feel like in the future the same thing hopefully will happen.
Of course. Well, you think about how it's happened 15 years ago, how affordable rents were, and they obviously increase over time. It's just a natural thing that happens, right?
You know, I think that's why people have always invested in stocks or property, because it has outpaced savings in the bank and inflation. And that's the reason I've gone into property. I love stocks, but I don't really know enough about them to feel comfortable at the moment. But, you know, property's been sort of my simple way to get into the market and to work towards it. So, you know, the idea of the couple of houses giving roughly 100 grand a year worth of income in the future is a really nice starting point. Now, we've got clients that are about to start looking for their 5th and 6th houses and granny flats. We've got other clients that bought one 5 years ago. You've got to figure out in terms of your accumulation what the end goal number looks like, and then just reverse it, engineer it backwards from there.
Hell yeah. And for me, you know, I'm not looking to be a full rich guy, you know, like I just want a simple life, but I want to have choices to be able to take my family overseas, to go on holidays myself, to send my kids to the good schools, to never have to worry about, you know, an operation or something like that, you know, just not being financial hardship. So for me, I'm kind of pushing it just a little bit past 100. You know, I want to try and get to like 100 net. So I'm sort of working towards the 3 properties to financial freedom, because I know that's going to sort of put me just above that level where, you know, it's super comfortable and I can have those additional choices.
So once you finish this accumulation phase, and it could take you 15 years to buy them all, or it could take you a year, we move to the second phase, which is consolidation. And that's really just super boring. Trust me, I'm in it.
Or super fun.
Or super fun. We'll talk about both of those in a moment. But it's boring in the sense of now all you do is pay off the debt on the properties.
Yeah, which is a slow burn.
But it's super fun because from that moment, you've got the choice to be present, to live your best life, and to also know that you're going to be financially free down the line. It's just a matter of now, how long is it going to take?
Yeah, so let's talk about the slow way, I guess, during that consolidation phase, which is essentially just taking all of the profits from the houses, instead of, you know, using that short-term passive income that you may receive, just reinvesting it back into the properties to pay off that debt a little bit sooner. And then rather than saving to buy more properties, the surplus income that you have, the savings that you have from your job, you just park that back against the properties.
Exactly. You know, other things that we do is pay principal and interest. Other things that you do at that time in consolidation is maybe, like we talked about in the previous podcast, renovate the home or tidy up the yard and increase the rent return on the home to create more surplus income to pay off the debt. Another thing that I've done on top of, as Simon mentioned before, with the surplus income, rather than just paying principal and interest for 30 years, which is the bank loan, contributing a little bit more to pay it off faster. And then with a lot of properties currently in Australia, you can talk to your accountant or tax depreciation specialist, but generally when they're brand new granny flats, you do get some sort of tax benefit. And when that comes back as a tax return, rather than spraying it on a holiday or a car or just to paying off things, I just use that tax benefit to go straight off the home loan as well. And what we found, if you're doing that combination of principal and interest, paying off some extra debt with your savings, using the extra surplus income from the property, using the tax benefits, you're going to get there a shitload faster than you will from just doing the old P&I over 30 years game.
Exactly, and that's how you cut that sort of 30 years down to 15 really. Maybe it might take you just slightly longer. There's so many things that come into play.
Especially while interest rates are so low. Like Simon's just telling me this morning he's going to get 2.5% rates on his loans, which is just unheard of. And if he's got a property with a granny flat that's giving him a 6 to 7% rent return, there's going to be leftover money. It might be 10 grand a year. It might be 15 in Simon's case. That just goes, if he was in consolidation phase, straight off wiping debt so he can get there so much faster while they are low.
Hell yeah, which is great. So you've got to take advantage of those market conditions. Now, the fun way to consolidate that debt, which I'm probably personally thinking of doing, is investing in other assets. So, once you set the portfolio up and you move to the accumulation, excuse me, tongue twisters, geez, move to the consolidation phase, then you would have learned a lot throughout buying 2 houses and building 2 granny flats. You've likely built your team. You've got a good mortgage broker. You've probably got a good solicitor, good property managers. You've learned a lot, and you can use those skills to then go and invest in other assets that maybe you shift the strategy from a capital growth and cash flow to just a more capital growth play, and you hold it for a period of time and you strategically sell it at some point in time in the future and use the capital gain from that property to pay off the debt. So essentially just continuing to leverage off the market to pay off the debt instead of hustling away and slaving away and paying all of that surplus income that you earn off on the properties.
So an example of this is, imagine you had 2 houses and 2 granny flats that you'd bought and set up in Sydney 10 years ago in the year 2010. And then in 2011, you went, I've got my little house and granny flat set up. I'm going to go buy one more property and I'm going to hold it between 2011 and then, you saw the top of the market in 2017, you sold it. Now, obviously selling it, there's capital gains tax, there's income tax, there's all the stuff your accountant would have to sort out for you. But even after all of those things, there should be some money left over. In fact, a lot of money if you did it in 2011 to 17. And so you use that big chunk of debt, or cash, to pay off a large chunk of debt straight away. Now, there's a reason people have bought their own homes and then another property and they've sold that property 10, 15, 20 years later to pay off their own home faster. And that's because based on the history of markets going up in value, it's such an easier way than busting your ass every single day for the next 30 years to do it.
Hell yeah.
Now, Simon's got a couple of houses that look like that at the moment that he might sell either at the top of this cycle or maybe the top of the next one. Or maybe he'll hold them. We don't know yet. That's your decision to make.
And this is what I was sort of indicating at the start. Things change throughout your journey and circumstances change, priorities change, lifestyles change. So I'm not super strict on myself with those properties, but I still know what I need to do in order to achieve the level of financial freedom that I want. So it's important to recognize that. But yeah, things change, right?
Things change and you make decisions at that time. Now, obviously selling a property that's in a great location, that's that single income blue chip one, is going to affect your long-term wealth position as well. And that's something you've got to talk about with your advisors. But for me, my key priority and value is to get financially free soon. And because it's soon, I have absolutely no problem using what I call these partner properties to buy them, hold them, sell them for a profit and wipe off debt, because it's a strategy for me. And because this is a business, I'm not emotionally tied to the loss in long-term wealth, because I'd rather be 40 years of age with choices than 77 years of age with them. You know what I mean?
Exactly.
The other thing about this second phase, which is consolidation, is this is really, once you've got them set up and you know you're going to be okay in the future, it's the time to start making choices in your life. Now, you may or may not, depending on your deposit and the properties in the area you buy, have some passive income straight away. But if you do, you might be able to, like I've done and Simon's done, is go down to 4 days per week. You know, sometimes we work 5, but most weeks in the new year we'll work 4. Take some extra holidays. Use that surplus income to pay off debt on your own home faster, or to move into that place that you've been looking to. Alternatively, you could, you know, retrain and go into a new career, a higher paying career or a more meaningful one. You could spend more time with your kids. You can take the pressure off your job and, you know, drop the kids to school or pick them up, or have that extra day a week for your partner. There's just choices at that phase. And what I really want to get across is you don't have to wait till you're financially free to do that stuff. Once you've got yourself set up with the strategy, whether that's stocks or property that's going to get you there, then you can take the pressure off and start to enjoy the journey, the process and the plan as much as the destination in the future.
100%. And, you know, it's good to recognize that worst case scenario, if you just go principal and interest on those properties in 30 years, you're going to be free. You know, so that's what gives you the freedom and that ability to kind of, you know, take a step back and go, shit, do I need to continue working 60, 70 hours a week? Do I need to trade all of this time away from my family or hobbies or things that I enjoy doing just to try and earn an income? But when you've got that asset, that portfolio there, that's your safety net in the future, it gives you a lot more freedom of choice at an earlier stage in your life.
There's only really one question or two questions in the consolidation phase. The first one is, once you're set up with the properties, how can I pay this off faster? And you ask that question with the human mind and you will find or Google hundreds of answers. In fact, just Google it. That's way easier. Or take some of the ideas we talked about before. However you want to do it. Like I talked to a client in Reese who's bought a few houses with us, and he was like, mate, I did this spreadsheet, you know, because he's an analytical guy like I am. And he's like, if I invest in stocks over the next 15 years with my surplus income, apparently in his spreadsheet, based on his indicators, he would be able to pay off both of his properties outright without paying a single dollar off over the next 15 years using his wage. And he was kind of like, all I need to do is this and it will equal that. And I'm like, actually, all you need is the market to do that. And, you know, there's always that side of things too. You never know what's going to happen. But I'm blown away by the ideas that people have. Like, there's so many different things I've seen clients do to get rid of the debt faster.
Yeah, and like a cool thing as well is, you know, you can leave that job that you don't like to start the business that you've always wanted to and do something that you're passionate about. And sometimes those businesses end up being a cash cow as well, which might end up helping you pay off some of the debt a lot sooner. So this is what we love about the 2 Properties for Financial Freedom strategy, is it's achievable, it's realistic, and it gives you choices way sooner.
Way sooner. Now, the third phase is simple. It's the freedom phase, it's the lifestyle phase, it's the true choices phase. And I don't know what it feels like yet because I'm not there, but I'm trying to slowly work towards it because I've realized it's not a sprint. And when you start to enjoy the journey and the person that you are along the way, and you get to do meaningful stuff along the way and realize that, you know, the dollar in the bank isn't really going to change your mindset because you'll be the same person there. But like theoretically, you know, I'm assuming when I get there, it'll be nice. Like it'll be nice to have a passive income for life, to know that I can leave my kids with something in the future, which is super important to me.
Of course.
To know I hopefully won't ever have to be on the pension, and that I'll have choices in retirement to travel, to give back. Maybe one day I'll decide I don't want to do this work anymore, and I will have a choice at that point to be able to, you know, write a book about some of the lessons we've learned, or to help people for free, like to just, you know, help people buy a couple of properties a month without having to charge them because I don't need the income. Like it's so exciting to think about what full financial freedom could potentially mean. And I'm sure it will feel different when I get there, but the idea of it excites me, and it makes hard days easier because you're always working towards something. It makes hard jobs simpler because the reason you're going to that hard job is to take the income, to accumulate, and then to consolidate. And it's a different way of working when you start to connect to a higher picture.
100%. And I like the idea, you know, I feel as though that this is a choice for anybody that's listening to this podcast right now. I'm sure you're in a great position, and, you know, you have the ability with this long-term plan to be focusing on that. And, you know, we should all be working towards achieving financial freedom and actively working towards it, you know, whether it's through business, stocks, shares, property, you know, working towards it, because the alternative is you work until you're 65 or 70 years of age, and then you live off the super for the rest of your life. You know, that's the alternative. So just think about where you're at in your life right now, add 15 years to it. You know, some people may be able to make that 15 years 10 or 7, depending on your situation, but, you know, 15 being a pretty good conservative number there. And, you know, just think about that. You know, if you're 30 now, by the time you're 45, you're going to be financially free.
You know, I think about this all the time. Like, what 45-year-olds do I know that have choices? And
zero.
You know, I know one of my mates, Macca's brother, did some smart stuff when he was a bit younger with businesses and properties, and he's sort of set up now, and he's like still dabbling but done. And I remember when I was at uni, the first person I met was this guy, Bomber. I was playing soccer with him on the sunny coast, and I was his like tiling labourer, and he'd done it. Like, he'd paid off his own home. He had a couple of other investments that he was paying off. He had 3 people in his team that were doing 99% of his work. He was just getting him set up. And he said to me, he's like, man, I thought he was so old at that point. He was like 35. And he's like, mate, I've got about another 3 to 4 years in me doing this way, and then I'm done. And I couldn't get it, but I just asked him heaps and heaps of questions. And when I realized that was a thing, he's like, read this book, read that book. And it's like, you know, sometimes just finding someone like that that's on their way is like enough to get the inspiration that it's possible. Especially, like, I thought if he could do it, yeah, I could definitely do it as well.
Yeah, no doubt about it. No doubt about it. So this is exactly what we're focusing on personally and working towards. And I'm only at the very beginning, still well and truly in the accumulation phase. You've just moved into the consolidation phase, and, you know, it's really cool to be working through this and working with our clients at the moment and helping them execute this strategy, or even just having strategy sessions with people and making them understand that, you know, their original plan isn't what they really need to be focusing on, and there is alternatives. And sometimes you just got to think outside the box and be a little bit creative, because to have something that's not normal, which is financial freedom, sometimes you got to do something that's not normal and go against the grain. And, you know, this hasn't been something, you know, I haven't heard many people talking about these types of ideas. And it's just super simple, guys, like 2 houses and 2 granny flats, you know, like that's it.
That's it. Like, it's a beautiful starting point. If that's too much, do 1. If that's not enough, do a few more. You know, you get to decide your own adventure. But what I've learned through having an idea of where you want to be and who you want to be when you get there, through putting in some sort of plan, whatever that looks like for you based on whatever ideas you're collecting from people like us, and slowly and consistently in a disciplined way working towards it through saving and investing money and paying off debt, and doing it and realizing that you don't have to go huge to be successful, that financial freedom, I think, is more important to me than millions of dollars in the bank, and to recognize that it's going to take way longer than you think. Like, I remember setting this goal at 24, that by age 30, I'd have 100 grand a year in passive income. I didn't even get close to it. But now I realize that if I could talk to my 24-year-old self, I'd say, look, if you're strategic with this, by the time you're 40 or 45, you'll be exactly where you want to be, and that'll still be incredible. And, you know, that's exciting. That's what we wanted to share with you. Simple ideas. All of the devil's in the detail, obviously, but you can learn those details through our YouTube videos, through other people's YouTube videos and podcasts, and through slowly and safely working with a good team of people to, save you from some of the mistakes that I've definitely made throughout my journey anyway.
Seriously. But that's always a part of the journey, and you wouldn't be where you are right now without making those mistakes as well. And we wouldn't have the business, so I wouldn't be able to tell people about this sort of stuff. So everything happens for a reason, right? And, still going to be financially free at a younger age than 99.9% of people.
Without a doubt. So if you haven't already done so, guys, please subscribe to the podcast. Please give us a 5-star review. We would really appreciate that. You can check out our stuff on the website or on the YouTube channel. If you want to see the behind the scenes, check us out on Facey and Insta as well. We truly do wish you all the best. The place that we're coming from is we care so much about your success and helping you. Even if we never ever talk to you, we just want the best for you, and we hope this information and these crazy ideas and our little bits of banter, connect with parts of you, and you can take these ideas and go and get some other better ones and get to where you're supposed to be in your own life.
Good luck, guys.
Sweaty. So sweaty.